now! Before you check out that Shopee cart, Lazada cart, don't. What if I tell you that for just 1,000 pesos, you can level up your stock power right now? Yeah, keep watching. What's up, friends? Welcome back to this week's video. If you're new to this channel, hey, what's up? My name's Nicole. I make videos every Wednesday and I mostly talk about things related to personal finance, investing, but then sometimes I talk about self-development stuff too, so yeah. Featured comments for this week, Janina Faith Cruz. I didn't see myself as someone working on personal finance this quarantine, but their videos made me do it. Thank you so much, Janina. Shout out to everyone who just randomly found my video, who didn't really have the intention to fix your finances, but then here you are, watching my Mimi videos and hopefully learning a thing or two. Samantha Pagtulingan. Yay, so happy to be part of your OG fan fam. Yes! We recently hit 1,000, so woo. How about making a name for us? I don't know. What do you guys think? What's up, breads? I don't know, what do you guys think about this? Do you guys want to be called some name? I learned to track my expenses, made my own personal finance spreadsheet, and started my business. Amazing! Mwah! Good job. I'm just making these videos. Sometimes I don't really understand the things that I'm doing, the things that I say actually have an impact on you guys. It's really wild whenever I read comments like this, like, oh my god. But I keep saying action is the most important thing, and it seems like you guys really are taking action. So awesome, good feelings. A viewer named Zai sent me these icons in my email. They're so cute. They're breads. So if you see like the subscribe button down here or somewhere, if you're watching this, thank you so much. So today we're talking about mutual funds, UITFs, ETFs, what the heck they are, and how you can get started investing in them. Fun stuff, yos. Let's get it. I'm giving you guys some action points. We're going to the exciting stuff. Just a reminder, I am not a professional financial advisor. Always do your own research, learn about these things as well, and then make your decisions accordingly. I'm so sorry guys, it just started raining. If you're just wondering what that sound is, it's the rain. We're going to talk about mutual funds, UITFs, ETFs. The way I'm going to structure this video is that we're going to talk about what the heck they are. Mutual funds, what's that? We're going to talk about the different kinds and different types there are out there. We're going to differentiate what bond funds are, equity funds are, index funds, and the pros and cons. How do you invest in these mutual funds? Where do you go if you want to get in on this mutual fund action? In the latter part of the video, I'm also going to talk about where I personally invest, and I'm also going to suggest some platforms that you guys can check out so that you can start investing in mutual funds. Action is the most important thing, and I'm going to make sure that you guys do take action. First of all, what is a mutual fund? What's a UITF? What's an ETF?
Oh my god! What is that?
Mutual funds, UITFs, ETFs, these are just pooled funds. What that means is that there's like a big fund and then a lot of people all invest into that fund. When you're buying stocks in the stock exchange, there's a minimum amount that you're required to purchase. You can't just like buy one share of Jollibee. That's not allowed. Usually, there's a minimum board lot of the pinaka minimum amount that you can buy of a stock. It gets pretty pricey, especially for the stocks that are more expensive and with the higher board lot. One of the things that are important about investing is the concept of diversification. It's part of risk management. As students, for example, if you're a student or if you're a beginner and you're just starting out with the investments, how are you gonna diversify? If like, kunwari, you wanna buy Jollibee, you wanna buy SM, you wanna buy Ayala Land, but then you only got 5,000. How you can't buy all three of those. You have too little capital. So another option for you is to invest in a mutual fund. It pools the money of a lot of people. Let's say person A has 1,000 pesos, person B has 2,000, person 3 has 5,000. So all of those people invest in the fund. These pooled funds are managed by fund managers. Duh. Those are the people who manage the mutual fund, the UITFs. They're the professional people who do all the researching, accounting stuff, and like looking at the balance sheets, all of those complicated things that you have to consider when you're investing in a certain company. They're the ones who do the dirty work. Buy and sell, buy and sell. Look at mutual funds as though they are individual companies, and all the investors are the ones who are buying shares of that fund, of that company. Similarly to when you're investing in stocks, as a part owner of a mutual fund, you also get rights and privileges. It depends on how much shares you have, but yeah, voting rights and stuff like that. Mutual funds, UITFs, ETFs. What's the difference? First of all, they're all pooled funds. So the only difference is who issues them. Like for example, mutual funds are issued by individual companies, my investment companies. Sun Life, they offer their own mutual funds. Atram, they offer their mutual funds. Phil Equity, FAMI, I think the SEC is the one who regulates mutual funds. Whereas UITFs are offered by banks. For example, BDO, BPI, Metrobank, they all have their UITFs. It's the BSP who regulates mutual funds. Very small differences. It doesn't really matter. And let's talk about how you make money, buy and sell, capital appreciation kind of thing. Each mutual fund, each fund actually has an average share price or an average price per unit. NAVPS for mutual funds and NAVPU for UITFs. Let's say for example, you have 1,000 pesos and you want to invest in a certain fund. If each unit is 10 pesos and you have 1,000 pesos, bam, you have 100 shares. In a few months or so, each share is now worth 12 pesos, then congrats, you've earned 200 pesos from investing in that fund. That's essentially how you make money in mutual funds, UITFs. The way they calculate NAVPS and NAVPU, it's calculated on a daily basis. The NAVPS is just the total value of fund assets minus the liabilities over the number of shares outstanding. So how much money they have versus how much they owe over how many shares are out there in total. So now you know what mutual funds are. What's the good and the bad of investing in mutual funds? So pros, well, for one, it has a low barrier to entry. Most mutual funds only require like 1,000 pesos or 5,000 pesos minimum to get started investing. And then the minimum incremental top-up is around 500 pesos. When you're investing in the stock market kasi, there's a minimum board lot, and also there's the 8K rule that you need to be aware of to maximize the fees. Very accessible, friends. Second, diversification. So when you're investing in mutual funds, your money is immediately diversified across many different investments. So for example, if you're investing in an equity fund, you're not just invested in like one stock. It's usually a handful of stocks, depending on the fund. Diversification, risk management, we talked about this in the previous video, so yeah. And then there's also like less pressure for you to monitor your investments. For one, like I mentioned, these are pooled funds that have fund managers. There are professional people who do the researching and also making the decisions on behalf of the investors. If you're the type of person who you can't really like monitor all of your investments, this might be a good investment for you because there are already expert fund managers who do the deciding for you. So less stress on your part, but yeah. According to the National Internal Revenue Code, mutual fund investments are not taxed. Unlike stock investments, for example, where there are transaction taxes, like when you make a buy or sell. And those are the pros. So now let's move on to the cons. So you don't have that much control whenever you're investing in mutual funds because there are fund managers who do the decision making for you. It depends on you whether or not the lack of control is a pro or a con. If you're the type of person who wants to be very hands-on in your investments and you want to make the investing decisions like, I'm gonna buy this stock at this price during this time. Some people find it as a con, so it depends on you. And then there are fees. Even though these investments aren't taxed, there are a couple of fees associated with these funds called the front-end fee, the sales load fees. Sometimes you need to pay a company a fee to be able to invest. Second, there's the exit fee. A lot of mutual funds have a minimum holding period. So for example, funds require you to keep the investment for about 30 days or 180 days. And if you redeem it before you reach the minimum holding period, then there are fees associated with that. There's the management fee. Because there are fund managers doing the investment for you, there's a charge for the operation of the fund. Some funds have bigger management fees than others depending on the way that the fund is managed. So yeah, it's something to keep in mind. Let's say you want to buy shares of a certain fund. Well, most funds have a cutoff period. It's usually 12 p.m. or 2 p.m. and you won't know the price of the NAVPU or NAVPS until the end of the trading day. So you won't exactly know how much you're buying it for until the NAVPU is released. I don't know, I think it's a con. I don't know, it's always something that bothered me a bit. And there's also the turnaround time for redemption. Let's say you have shares of a certain fund and you want to liquidate it. There's usually like a 3-day, 4-day window before you actually get it and cash it out. When you're investing, let's say this is you're investing in a mutual fund. When you're investing in a mutual fund and the mutual fund is investing in like a company, you don't actually own shares of this company. That's not the way it works. As a shareholder, you own shares of the mutual funds. You don't own any direct shares of the company. You're a stockholder of the mutual fund and not the individual companies that the mutual fund is composed of. Some of these pros and cons are resolved, like there's like a way to get over these pros and cons, and that's through the exchange traded funds, the ETFs. An exchange traded fund is traded on the stock exchange. You can buy and sell it freely during the market trading hours, so you don't have to go to an investment company or a bank to be able to invest in an ETF. You can buy and sell it in the stock exchange. There's only one ETF here in the Philippines. It's called the First Metrosec Exchange Traded Fund, FMETF, and it's an index fund that tracks the PSEI. Something to keep in mind when you're choosing a fund. Historical performance of the fund doesn't really dictate how it's going to perform in the future. It's not like, oh my god, this mutual fund has been booming these past few years. It's not guaranteed that it's going to keep booming in the next few years. It's not an indicator of how well it's going to perform in the future. So yeah, keep that in mind. Alright, so now let's talk about the different kinds and types of funds out there. When you're investing in mutual funds, it's not just like, I'm gonna invest in mutual funds and that's it. No, there's actually more choices, and like, what kind of mutual fund do you want to invest in? There's about 6 types of mutual funds. There's the index funds, equity funds, bond funds, balance funds, money market funds, and feeder funds. Alright, different choices for different people, different investors with different goals. So let's go through each of them. So first of all, index fund. An index fund is essentially a fund that tracks an index. We only have one index here in the Philippines, but like for example in the US, there's a lot of indices there. The Dow Jones Index, and then there's the S&P 500. So a lot of indices in other countries, but here in the Philippines, we only have one index, and that's the Philippine Stock Exchange Index, the PSEI, which tracks the performance of the top 30 companies. These funds are generally passive, so the fund managers who manage this fund don't really make any decisions. They just track the performance of the stock exchange. Usually, index funds have very low management fees because it's a generally passive fund that just tracks the index. For the index fund, we actually have one exchange-traded fund, but in the US, there's like thousands. There's like, I think, 2,000 choices of ETFs there in the US. But here in the Philippines, thankfully, we only have one. So you don't like, your head doesn't explode for like how many options are out there. But yeah, so the FMETF is the only ETF here, and it tracks the PSEI. It's traded in the stock exchange. So if you want to invest in the FMETF, you have to open an account with a stockbroker, and then you buy and sell shares of the fund there. So the fees that apply to stock transactions also apply with the ETFs. Alright, very clear, good job. Okay, now let's talk about equity funds. For those of you who don't really who get like kind of confused, equities are just stocks, okay? Equities are just ownership of a company. Equity funds invest in individual companies. So they invest in stocks, but then as opposed to index funds, they don't track the index, they try to beat the index. So equity funds are usually actively managed funds. The fund managers do heavy researching, trying to make decisions of what stocks to buy, when to buy it, at what price, those kinds of things. There are so many different equity funds out there, and they're all trying to beat the performance of the index. So yeah, something to note, different equity funds have different strategies according to the investment objective, according to the fund prospectus. Take note of the fund prospectus, the investment objectives of the fund, the composition of the fund, what companies is this certain fund actually invested in. And then there's the bond funds. Bond funds, like the name itself, it's a mutual fund that invests in bonds. We talked about bonds in a previous video, and essentially it's very pricey to invest in individual bonds. The minimum investment for bonds is usually 100,000. So damn, I don't got that money. So an option, if you still want to take advantage of the benefits that are in bonds, given that they're less riskier form of investment as opposed to stocks, you can actually invest in a bond fund. So this is a mutual fund that invests in a couple of bonds. So there are so many bond funds out there, then you can make your own research. But yeah, now let's talk about balance funds. So yeah, Hannah Montana, that stuff. It's essentially what balance funds are. It depends on the composition of the balance fund, but usually it's composed of equities and bonds. A portion of the fund is investing in equities, and a portion of the fund is invested in bonds. Because sometimes there are times when the performance of the equity market is down and the performance of the bond market is up. Balance funds try to give you diversification. Like for example, you want some equities, and you also want some bonds. Well, you can have it all in this balance fund. So yeah, you get the best of both worlds. But honestly, I don't know, like most people say that it's better for you to invest in an equity fund and a bond fund instead of investing in just one balance fund. In balance funds kasi, you don't have control over how much is exactly invested in equity funds and how much is invested in bond funds, for example. So if you want more control over how much you want to allocate, you can do that yourself. Money market funds, they're just funds that are invested in relatively low risk investments. Cash assets, time deposits, bank deposits, government securities. They're relatively for short-term investments that you need your money kaagad, so you don't want a lot of risk. Lastly, we have the feeder funds. Feeder funds are essentially some examples if you look at ATRAM. So these are essentially funds that are available here in the Philippines that's also investing in a separate fund, usually somewhere else. Like for example, there's a fund available overseas, like in the US market. Right, I said that there are a lot of funds in the US, for example, and then we have a feeder fund. The funds that are being invested here are just being fed into another fund. A downside of investing in feeder funds is that you get hit with double fees. Like for example, you are investing in this feeder fund, so you already get fees with that. And then that fund is investing in another fund, in a larger fund, overseas fund, and that fund is also charging fees. But then I don't know, it's the price of convenience. With all these different kinds and different types of investments, the performance from fund to fund also differs based on so many different factors. Just keep those in mind whenever choosing what funds to invest in, because which fund you invest in are dependent on your current investment goals. Like for example, if you assess your risk assessment, say you're an aggressive investor, then you can take more risk and maybe you're willing to invest in equity funds or index funds, for example. Whereas if you're a more conservative investor, maybe you'll be investing in bond funds, balance funds, money market funds. But yeah, you get it. And whenever you're gonna invest in a certain fund, make sure to read the fund prospectus, so you have an idea of what's going to happen to your money. The prospectus is usually just composed of the information about the investment. What securities are these invested in? Is this going to invest in bonds? Is this going to invest in stocks? What kind of stocks? In blue chip companies, large cap companies, medium cap companies, small cap companies. Mga fees associated with a certain fund, it's in the fund prospectus. Hopefully now you're kind of alright, I get you. I know what you're talking about now. Mutual funds? Psh, I don't know what that is. I want in on it. How do I invest? Well, let's talk about the different ways that you can start investing in mutual funds. Right, exciting, action time. You got a couple of options of where to invest in mutual funds. One, like UITFs, you can start investing in your own bank. Look at your bank's website, what UITFs they offer. Most banks offer UITFs naman. Union Bank has their UITF, BDO, BPI, they all have their own UITFs. So research accordingly. It's a lot easier, it's a lot more convenient to invest in your bank's UITFs. And then next, you can also go directly to the company. So for mutual funds, for example, you can go directly to the company website and see what application processes they have. Or you have to go to the branch. For example, Sun Life, Philam, you have to apply there. And then the third one, most convenient, I would say, brokers like Call Financial, First Metrosec, they actually have there's a mutual fund grocery store. I think in Call Financial, they call it their fund source. They have ALFM funds, ATRAM, FAMI, Philequity, Sun Life, nearly 30 mutual funds for you to choose from. So yeah, take your pick. In First Metrosec, it's called Fundsmart. They also offer a number of mutual funds on their platform. You can sign up for an account in these stockbrokers and then start investing in these funds. For as low as 1,000 pesos, 5,000 pesos, you got it. Go take an action. Another option is seedbox.ph. So they offer ATRAM mutual funds. So you can see on their site, Alright, so let's talk about where I'm investing in. Like personally, I'm not investing in individual stocks anymore. Like when I started out, I bought like individual stocks, mga blue chip stocks. But now I'm not doing that anymore because of the stress. I can't choose company. I don't trust myself in like choosing the companies, and I also don't dedicate like enough time into researching to like the companies that I'm buying. So I prefer to just invest in mutual funds, mga index funds. There are 3 mutual funds that I'm currently investing in. So the one is the FMETF. And I peso cost average it. The FMETF has generally outperformed the other index funds because of fees. It's a lot cheaper, and it's an index fund, so it's a passively managed fund. And I also have like 2 equity funds. I invest in Seedbox. I invest in the Alpha Opportunity Fund and the Global Tech Opportunity Fund, which is a feeder fund that invests in the tech companies. Those are the funds that I'm currently investing in. Syempre, like you might argue that, you're losing out on the gains, yo. Ha! You noob. Didn't you know that you can like get more gains when you invest in individual stocks? First of all, yeah. I mean, like I understand there's a lot more potential gain if you buy and sell individual stocks. But then there's a lot more risk, and I don't have the time to dedicate in researching individual companies and then also like technical analysis, when to buy, price charts, all those things. I prefer to just like dedicate my time in making videos like this and also like leveling up my other skills so I can generate more money and capital instead of chasing the gains with the investments. That's how I prefer to do things. Alright, so if you reached this part, thank you so much for watching. Follow me on Instagram. And then also, I made a Discord server so you guys can join the Discord down there. Just a link down below. Yeah, see you guys next week. Bye! Don't Shopee. If you have money to Shopee, if you have money to Lazada, you have money to invest in mutual funds. So go invest in mutual funds now. Yeah.